Ladies and gentlemen, good day and welcome to Hi-Tech Pipes Limited earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pallav Agarwal from Antique Stock Broking Limited. Thank you and over to you, sir.
Yeah, thank you, Shlok. Good morning, everyone. Warm welcome to the first quarter results call of Hi-Tech Pipes. We have the senior management of the company represented by Mr. Anish Bansal, the CEO, and Mr. Arvind Bansal, the ED and Group CFO. So I would now like to hand over the call to Mr. Anish Bansal for his opening comments. Over to you, sir.
Thank you, Pallav. Good morning, everyone, and thank you for being with us today. It is an honor to address you and share the remarkable strides our company has made over the past years. As we reflect on our journey and our achievements, I am proud to say that we have solidified our position as the leading manufacturer of ERW steel tubes and pipes in India. This being an election quarter in India, there was a code of conduct and slowdown in the government activities. Further, there was steel price volatility in these domestic and international markets. But in spite of all these domestic and global challenges, our company has given outstanding performance and growth. This quarter, we achieved a record-breaking sales volume of 122,000 tons, marking a significant 45% increase compared to 84,000 tons in Q1 FY'24. This milestone not only underscores our growth but also highlights our ability to meet and exceed market demands. Our revenue has risen impressively by 35%, reaching to an all-time high for any quarter of rupees 867 crores, up from rupees 642 crores in Q1 FY'24. Our EBITDA has more than doubled, increasing by 101% to rupees 42.69 crores from rupees 21.19 crores in Q1 FY'24. This substantial improvement in profitability showcases our focus on operational efficiency, cost management, and value-added products share. Further, our profit after tax has surged by staggering 125%, climbing to rupees 18.05 crores compared to rupees 8.03 crores in Q1 FY'24. This exceptional PAT growth is the direct result of our successful strategies in higher sales realization, better inventory management, cost reduction, and better product mix. A significant contributor to our success in this quarter has been an increase of share of value-added products and contribution made by our recently commissioned Sanand Unit 2 Phase 1. As we continue to ramp up operations, we anticipate an increase in its output and efficiency going forward. These advancements have played a crucial role in enhancing our production capabilities and market position. We are proud to have supplied steel pipes for some of the country's most prestigious projects, including the Noida International Airport, Kangra Airport in Himachal Pradesh, Khavda Solar Park in Gujarat, which is the world's largest solar park, Agra Metro Project, and Gandhinagar Metro Project, to name a few. These projects not only showcase the quality of our products, but also our capability to support major infrastructure developments. In addition, we have taken notable steps in this quarter to improve our sustainability and operational efficiency. Our proposed installation of rooftop solar generation power plant at our new Sanand facilities is under progress and is expected to be commissioned in October 2024. The solar power purchase agreement for sourcing of green power through group captive open access is expected to be available in September 2024. Post this expansion, the total solar power consumption by the company will be at around 13.5 megawatts, which will be around 30% of our total power requirement. These initiatives are substantially aimed to reduce our energy costs. Further, we are actively engaged in the generation and captive consumption of green hydrogen gas, contributing to our commitment to environmental sustainability as well. The Government of India has continued its thrust on infrastructure development in the country. and has increased its total outlay to rupees 11.11 lakh crores in the recent budget announcement. High-Tech is well positioned to leverage various government initiatives such as Pradhan Mantri Awas Yojana, Amrut Scheme, Smart City Mission, Railway Corridor Development, Airports Development, and the Jal Jeevan Mission. These initiatives are creating a favorable environment for growth and providing ample opportunities for us to expand our presence in the future. The construction of a brownfield facility with an installed capacity of 110,000 tons in Sanand Unit 2 Phase 2 and a greenfield facility in Secunderabad with an installed capacity of 1.5 lakh tons are at full swing and expected to be operationalized within this financial year. By the close of this financial year, the High-Tech Group will be at 1 million tons of installed capacity. India has taken the ambition to achieve 300 million tons of installed capacity for production of steel in India by year 2030. We are also ready for High-Tech 2.0. In its journey of growth and development, now we are ready for next leap of capacity expansion through greenfield and brownfield initiatives, along with technological advancements. Our next phase of capital expenditure includes an ambitious plan to put up new DFT lines for manufacturing of large diameter section pipe and to increase our installed capacity to 2 million tons over next 3 to 4 years. This expansion will involve introducing new product segments, entering new geographies, and further enhancing our portfolio with more value-added products. These strategic investments will position us to capitalize on emerging opportunities, drive growth, and continue delivering exceptional value to our customers and stakeholders. Thank you. We may now take the questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question is from the line of Vikas Jain from Phillip Capital. Please go ahead.
Good morning, sir. Congratulations on very good set of numbers.
Thank you, Vikasji.
Sir, my first question pertains to what has actually contributed to the volume growth in particularly this quarter, while we were thinking that the election quarter would be a weaker. And now, given we have done pretty good in the 1Q itself, are we upgrading our target to 5 lakh ton of sales volume this year itself?
So, Vikasji, first, your question regarding to, volume growth in the first quarter. So this was mainly due to our new facility which got commissioned in Q4 of FY'24 at Sanand. So the volumes have started, from this facility, and going forward, we expect, a decent volume from this unit. So as you are right, the total the target for this volume for this year will be approximately 5 lakh tons, 500,000 tons.
And what kind of EBITDA per ton we are targeting for this year?
So, sir, I think we'll be maintaining our EBITDA per ton, which is right now around 3,500. So this is to say the least. And going forward, once the steel price stabilize, it will start moving upwards.
Understood, sir. So my second question pertains to the sharp correction in the steel prices in the last couple of months. So given we carry an inventory, I just wanted to understand how the inventory could hit us on the 2Q. If you have any idea about that, or are we taking any step to mitigate certain portion of this impact?
Yes. So, there is a steel price, decline in last 2 months. So, we have, a good amount of fixed price orders against some, big contracts. So they are there. And the raw material price, that is also coming down. So, we get adjusted through that. So, more or less, I'm of a firm belief that, these, lower steel prices will result in higher volumes in the future. And the gap between the secondary steel and the primary steel has also narrowed down significantly. This will, help in achieving higher volumes for our company.
Noted, sir. So just one more thing. At 1 million ton capacity, how our value-added capacity and general capacity mix would look like in percentage terms?
So, sir, at 1 million tons, our value-added share is 50%.
So we have still good leg room to increase in the our blended EBITDA through value addition from current 36%.
Yes, sir. So currently, we stand at 36%, and going forward, I'm sure there is a room for expansion.
Understood. So just one last question from my side. Is it another 1 million ton expansion for your journey to 2 million ton? Have we ballparked the estimated what kind of CapEx we would be needing and how we are going to fund it?
Sir, this journey will be, 3 to 4 year journey. And, the finance and the funding will be through internal and external sources. It will happen, gradually. So, but we are confident that, we will take, a good position, and we'll further strengthen our position in the market. This will include new products, new geographies, segments.
Understood. And the CapEx, estimated CapEx, any ballpark figures which you would like to throw at us?
So it is still under, final stages of, we'll come with the, disclosures, as and when we are, closing, to the finalization stage.
Understood. Thank you, Ajay. That's all from my side. I'll come back to the queue if I have further questions.
You're welcome, sir.
Thank you. The next question is from the line of Anand Gulani, an individual investor. Please go ahead.
Good morning, Anish. Great set of numbers. Congratulations. I'm calling as a very happy investor who's multiplied his return by more than 11 times today. So very happy and congrats to you. I just have a quick question. If you can educate us in 2 minutes from your side, could you just talk a bit about this photovoltaic torque frame solar panel, which is being discussed a lot, and how high-tech fits in, if at all, from the customer side and also the supply chain side to make most of this market, please?
So, Anandi, so basically, the solar, as we all know, the India has a very ambitious, solar power mission. And in solar power, all the, the structural steel is now primarily made of, specialized steel tubes. And, High-Tech has taken initiative and, lead in this segment. The newly commissioned plant in Sanand is exclusively, catering to this segment. And, with the kind of the contract we are having in hand, going forward, we see a major import substitution of these tubes. As I mentioned in my, in my opening speech, we are supplying to the world's largest solar park in Khavda, Gujarat. This is a 40 gigawatt solar power plant, which is the world's largest. And, the commissioning and everything, it's a 3-year project. And, we being nearer to the project site, we are the preferred vendor for this.
Got it. Thank you so much. Congrats again. Thanks.
You're welcome, sir.
Thank you. The next question is from the line of Pradeep Rawat from Yoga Capital. Please go ahead.
Yeah, good morning and thank you for the opportunity. So my first question is regarding our utilization. So at our current facility, what kind of peak utilization that we could maintain?
Sir, good morning. So, sir, 70% is the peak utilization that is possible in our industry, and currently we are maintaining at 64 to 65%.
Yeah, and we have two capex in our pipeline. One is for Sikandrabad Unit 3, and one is in Sanand. So, am I right at this?
Yes, sir, absolutely. So currently we are on 7.5 lakh tons, and will be at 1 million tons by end of this financial year.
Yeah. So how much CapEx are we spending on both the projects?
So approximately 140 crores is the capital outlay for these two projects.
Okay. And as you mentioned that we have an EBITDA per ton of 3,500 rupee per ton. And in FY'24, we had an EBITDA per ton of 2,900 rupee. So my question is, what led to this expansion, and do we feel this expansion is sustainable going forward?
So, sir, our share of value-added products in last financial year was in the range of 27 to 28%, which now has gone up to 36%. And out of our total combined 1 million in capacity, we'll have approximately 50% capacity share on value-added products.
Okay. And what is the EBITDA per ton for value-added products?
So it ranges from 4,000 to 5,000 rupees per ton.
And for non-value-added?
Between 2,500 to 3,500 rupees per ton.
Okay. Thank you. That's all from my side.
You're welcome, sir.
Thank you. The next question is from the line of Hemant Soni, an individual investor. Please go ahead.
Congratulations on a very good set of numbers. And
Hemant, your voice is breaking.
The current participant seems to have disconnected. We will take the next question, which is from the line of Krishna, an individual investor.
hi, sir.
Hi, good morning.
Sir, congrats for the great set of numbers. So I just wanted to know what is the revenue 25?
Sir, sorry, I couldn't hear that properly. Hello?
Hello?
Is your question relating to revenue for this year?
Yeah, it's clear, sir.
So, sir, our projected volume for this year is 5 lakh tons, 500,000 tons, and we are poised to achieve a top line of 3,500 crores for this financial year.
Okay, sir. And sir, going forward, right now the Gujarat Sanand one, we recently started like 3 months back, right? So what is the current capacity utilization and how it will be like going forward?
Sir, right now it is in the range of 35%, and this is the second quarter of commissioning, and the certain approvals are expected in this current quarter, and we are hopeful to achieve 65% in Q3 and Q4 for this plant.
Okay, great, sir. All the best, sir. Thank you.
Thank you. Before we take the next question, we would like to remind all the participants that you may press star and 1 to ask your questions. The next question is from the line of Pradeep Rawat from Yoga Capital.
Yeah, thank you for the follow-up. So my question is related to my last question. So you said that our EBITDA per ton would be similar for FY'25. So what we have right now. So given our value-added share would increase for this year, so are we being conservative here in giving the EBITDA per ton guidance?
Yes, Pradeep ji, I'm a bit, conservative here because, steel prices are also moving, in a volatile manner. So I think, at this stage, it is better to be, conservative. And I think once this volatility sets down, we'll revise our EBITDA guidance going forward.
Okay. And my next question is regarding our space availability. So how do we have any space in our current facilities to expand a brownfield expansion?
So, sir, going forward, as I mentioned earlier, that our journey from 1 million to 2 million tons. So currently, the land bank the company has is to the tune of 500,000 tons. So till 1.5 million tons, the land bank is with the company.
Yeah. And what would be the capex differential between a brownfield and a greenfield expansion? So can you highlight upon that?
So, sir, greenfield capex is about 60 to 65% of the greenfield capacity. This is a typical, thumb rule.
Okay. And my last question is regarding the green hydrogen that you talked about. So I just missed that. Can you elaborate on that?
So, sir, for our CR tube division, we use, the annealing in-house. And ours will be the first company in the secondary steel sector, after the primary mills, to employ this, hydrogen gas for this. But this is a new technology, and we have taken the first initiative in this segment. And this will not only help in, mitigating our carbon footprint, but it will also add to a lot of cost savings.
Okay, understood. Thank you and all the best.
You're welcome, sir.
Thank you. The next question is from the line of Hemant Soni, an individual investor. Please go ahead.
Sir, congratulations on a very good set of numbers, and thank you for providing me the opportunity. Sir, Q1, because of the general elections and in spite of the heat wave, we have delivered a robust number. And Q2 is generally, seasonally a weaker quarter because due to monsoon activities, the infrastructure work comes down. So are we, anticipating good Q2 as well?
Yes, sir. We are expecting, good quarter in terms of volume. Because of this new facility, the year-on-year growth will be a good growth year-on-year basis.
Sir, I just wanted to know on the based on the quarter-on-quarter basis, because right now you just mentioned that the Sanad capacity which we recently committed in March is at 35% capacity utilization, and from Q3 and Q4 it will be at 65%. So what will be the capacity utilization in Q2? And can you throw some light on it, sir?
So it is still going on. I cannot comment too early. It is,
Any ballpark figure will help you.
It should be in the range of 40 to 50%, depending on the market goes. But we are focused. We are focused there, and lot of new segments are being added through this facility.
Is it 40 to 50, sir?
Yes.
So we can anticipate volume growth based on the quarter-on-quarter basis as well, right?
Yes, sir.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Reynolds Sivani from Sharekhan Limited. Please go ahead.
Good afternoon, sir. And congratulations on good set of numbers. Sir, I wanted to understand.
Sir, good morning. Ronald ji, can you be a little louder, please?
Yeah, hold a second, please. Now I'm audible?
Yeah, now it's better.
So, sir, I wanted to understand about this solar opportunity. As a big project in Gujarat, if I'm right, then 40 gigawatt capacity would require about 8 lakh tons of these tubes. So per annum, it would be around 2.5 to 3 lakh tons requirements. So are you the sole supplier for this project, or because this current capacity will not be enough to meet the demand from this project itself?
Yes, sir. So basically, it is this tube is being imported into India also, and now the supply chains are shifting from the other parts of the world to India, and India not only now going forward will cater to its local demand, but India will also come out as a major export supplier also.
Okay. So we are one of the suppliers to this project.
Yes, sir. Absolutely. And being in Gujarat, that is an added advantage.
And what is the price differential between imported and domestic in general? The cost difference?
About 5 to 7%.
Okay, 5 to 7% difference. Okay, sir. And second thing on, sir, was there any increase in the general products EBITDA per ton also during the quarter one? Because I think the EBITDA per ton reported was very good. So did you see any increase in this EBITDA per ton for general products, or only the value-added products contributed to this increase?
Sir, it will be mainly, through value-added products, going forward. And the EBITDA for, the normal products, I think it should range between 2,500 to 50,000 rupees per ton.
Okay. And lastly, sir, on this next CapEx phase, so you are still to, decide upon whether it would be brownfield or greenfield, or you want to, set up plants in other areas and you would be looking for land acquisitions in those areas also?
So, sir, we are currently we are having 6 manufacturing plants across the north, west, and south regions. So right now, the central part and the eastern part is still missing from the portfolio. So we'll definitely look towards, for a new greenfield plant in these regions. So going forward, journey from 1 to 2 million tons will be partly brownfield and partly greenfield.
Oh, okay, great, sir. And thank you very much, and best of luck, sir.
You're welcome, sir.
Thank you. The next question is from the line of Sumant Kumar from Antique Stock Broking Limited. Please go ahead.
Thank you for the opportunity, sir. I just had a couple of questions. So the first would be...
Mr. Sumant,
your voice... Hello?
Please speak a little bit louder, sir.
Just a moment.
Yes. So my first question was... the company that we are looking at. And then, with regards to conversion warrant, so what is the setup? That is the total outstanding warrants, and what was the money that got in, especially in Q1?
So all the warrants have been converted. There is no pending warrant conversion.
Okay. So what was the total amount which got infused in this quarter?
So this quarter, it was approximately 80 crores.
Okay. And what's the net debt issue?
So the total it is 350 crores, including working capital, which is the major part of it.
Okay.
Thank you. The next question is from the line of Nitin Gandhi from Inox Quest. Please go ahead.
Thanks for taking my question. Can you just share the interest which has been more or less at flat 140 crores quarter on quarter, whereas revenue has moved up by 180. So what's the steps taken in working capital cycle to improve this, or how much is towards a new plant which you commissioned, if you can give that breakup? And is this interest 14 crore likely to be sustainable, or will it further increase with working capital needs?
Yes, sir. I think it is towards its peak side. We have done 45% growth in volume for this quarter. So proportionally, it is in the same band.
No, it's not. No, that's what I'm saying. Q4 revenue was 681 and Q1 is 866, whereas interest is flat at 14 crores.
Yeah, so that's what I'm saying. It is the interest cost and the debt part is towards it's peaking out basically. Because the expansion, the new the plants, they are also in the advanced stages of commissioning. So I think this is towards its peak side.
Is there any terms change for working capital in the first quarter?
Sir, on H1 basis, I think we'll be maintaining our net working capital cycle days at around 45 days.
Okay, thank you.
Right, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Pradeep Rawat from Yoga Capital. Please go ahead.
Yeah, thank you for the follow-up. So, do we provide any order book or bid pipeline numbers?
So, sir, currently, we are having almost like 1.5 months of order book in hand. These are like recurring orders. So they are like, the orders keep getting executed and they are, replenishing at the same time. So we don't provide any like order book, as to say, but we have a healthy, like orders in hand, maybe from the, the distribution side.
Yeah. So as you said, these are recurring orders, so we don't bid for any kind of projects, right?
No. So basically, the bidding is, where, out of the total outlay, bidding is very less, where the timelines are, 3 to 4 months. So our focus is, the orders and which get executed within 2 months.
Okay. And do we hedge our raw material cost, or is it something different? Like, I don't have an understanding on this. So how do we maintain our margins constantly? So can you throw some light on that?
So, sir, you are absolutely right. As we are in the conversion space, so basically, whatever orders we get in hand, so we try to book our raw material, back to back, so that then, we get least affected by the raw material fluctuations.
Okay, sure. Thank you. That's all from my side.
Thank you.
You're welcome, sir.
The next question is from the line of Krishna, an individual investor. Please go ahead.
Thank you for the follow-up, sir. Sir, our solar plant is going to commission by end of October. So, after completion of the commission of solar plant, so how many basis points of margin expansion can be seen in the Q4?
So, sir, we'll complete this expansion, this solar power plant expansion by September or latest by October, given the monsoon period. And there will be, significant cost savings from the energy side. We expect, the total energy cost saving by 25 to 30% for that particular plant.
Okay. Yeah, got it, sir. And sir, actually there was some connection issue. I could not hear your revenue guidance properly. So you said 3,500 for the FY'25, right? If I'm not wrong?
Yes, sir.
Okay. And sir, since we are from Sananda unit, we are increasing our value-added products. So we can expect some increasing margin also, right, in this?
Yes, sir. Let's hope for the best. I think, after like September, the market demand will be, significantly higher, given the government capex, after budget, the allocations will go up, and we are really optimistic, and we are bullish about the H2.
Okay, sir. And sir, one question, if you may ask, permitted to ask. Regarding the bullet train project, in your PPT, you have mentioned that we are also a proud supplier for the bullet train project, right? So the project is still in the process only. So are we still supplying to this project?
Yes, sir, that is ongoing. I think it will go on till the end of this financial year.
Okay, sir. And sir, regarding the previous participation of the question regarding the Q2 revenue, already like 50% of Q2 is gone.
Yeah.
The current participant is out of the conference. So as there are no further questions, I would now like to hand the conference over to Mr. Anish Bansal for closing comments.
So thank you, everyone. In closing, I would like to say that our achievements for this quarter are a testament to the dedication and hard work of our team, the strategic foresight of our leadership, and the unwavering support of our stakeholders. We are poised for a robust future and remain committed to advancing our growth, innovation, and excellence. Thank you for your continued support and belief in our vision. Together, we are building a stronger and more prosperous future. Thank you.
Thank you, sir. On behalf of Hi-Tech Pipes Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.